I believe as we move into the first 2 weeks of February and Amazon, Apple, Meta, Google, and Microsoft report their earnings, they're going to drop substantially, and I'm going to have a buying opportunity to buy the companies that are going to take us through the next decade and lead us with artificial intelligence, machine learning, and quantum computing. And this is a buying opportunity of the decade. So I'm spending a lot of time trying to figure out where is that price that I want to buy these stocks. And I want to look at history to give me an indication as to what is the price I want to buy. And I want to share my studies with you here because I want you also to benefit from the buying opportunity of the decade.
Best of Us Investors presents Kerry Griegmeyer.
As I say, I think that Apple and Google and Microsoft and Meta and Amazon are going to lead us into the digital revolution 3, and it's going to be led by artificial intelligence, machine learning, and quantum computing. And we've just recently seen some of what artificial intelligence is going to do with OpenAI and Chat GPT-3, and that's a company that is backed very heavily by Microsoft. Well, my readings have told me that Google has a similar product. It is called Lambda, L-A, capital L-A, capital M-D-A, and it's also a voice recognition and a word recognition software that is similar to ChatGPT. So they're going to be there in some way. We know those two companies, and I'm quite confident that because the others that I've mentioned have all the data, or a lot of the data, they'll be there too. So with the earnings coming out after a very difficult last year, I believe that we are going to see a drop. I have been sitting on the sideline with a substantial amount of cash waiting for this opportunity. So I don't want to go into it blind. I want to have an idea and set my expectations. Whether they happen or not, by the end of February, I will be in all of these 5 stocks. So what I did was I went to TradingViews and I created this chart. And let me kind of walk you through what I did. I started the chart at the pandemic. That's on the far left side, and that's where I started tracking these stocks. And as you can see, I then tracked them up to December 2021, and that's that green line, and that basically shows me the peak, the general peak of all 5 of these stocks. And then I track them over to November of 2022, and that's that red line, and that's the trough. That's where they hit their bottom. So then what I did was take and create a spreadsheet, an Excel spreadsheet on them, and gained a feel for the movement. So you see here the first chart, the first area I show is their PE ratio, because I want to feel how are they being valued by the market relative to their price and their earnings. And then I go and I say, since the pandemic, the price that Amazon was at the day of the pandemic to where it is today, Friday, it is up 4%. Apple's up 118, Microsoft's up 68, Google's up 44, 66, and Meta's up 11. Then I do the same thing and say, okay, where is it relative to the December 21 peak? Well, Amazon's down 42, Apple's down 24, Microsoft is down 30, and 37 on Google and 60 on Meta. Then I go to the trough. That's November of 2022. What is their current price relative to that November price. And you see that Amazon is up 8%, Apple's down 5%, Microsoft's up 8%, Google's up 7%, and Meta's up 51%. Again, that's from the lowest price that they had. Now then, what I want to do is look at their current price and then say, how is that price relative to their last earnings? No, what I'm showing there is what was their price movement since at their last earnings. When Amazon gave its last earnings, which was back in it looks like in November, the price has dropped 28% within the next week. Apple dropped 14% within the next week, Microsoft 14%, Google 18%, and Meta 36%. That then gave us an average of those five. They averaged a drop of 22%, and the median drop is 25%. So that gives me some history on the movements of the stocks since the pandemic, because I believe the pandemic has basically created the surge, and then the ramifications of the pandemic has caused the trough. So now what I want to do is say, okay, let's add a little more data to that and come up with our best guess. So let me take you to another Excel spreadsheet. Okay, again, let me preface to say this is not financial advice. This is Kerry's best guess. And what I like to do is gather as much data as I can, look at it, interpret it, and then come up, what do I think is going to happen based on past history? So I created this Excel spreadsheet, and I want to share it with you. As you can see, it's an extension of the one I showed you on the graph. And again, I start with PE ratio. Again, and what screams at you here is Amazon's PE ratio of 85.6. And if you don't understand PE ratio, that says based on the current earnings of Amazon, to recoup their current price of $89, it's going to take 85.6 years. If all you do, put their earnings against their price. Whereas you come down here and Meta at $136 a share, 137, it'll take 15 years based on their current earnings to recoup the current price. So Amazon just screams at you, that's ridiculous, okay? So covering that. Then, as I showed you, the price movements relative to the peak and the trough and the pandemic. So what I have in this first column here is it says target price average. And that is if, based on their last earnings statement, all of the stocks, all of the five, they had an average drop of 22%. So if I take their current price, as Amazon as an example, and I multiply it times 78%, that would be the 22% drop, their price then would be after earnings at 76. And you see Apple at 105, Microsoft at 186, Google at 72, and Meta at 106. If then I take the median drop in earnings and say, okay, use that as my gauge as to what the earnings statement from February is going to be, then I come up with these prices. If I take the drop from each of their earnings and say that is what it will drop again this round, we come up with another price. Then what I show is their 52-week low. Okay? So what I do then is I sit and I look and say, okay, if I use past data, it looks like Amazon's price will be somewhere between $70 as a low and 81 as a high. Okay? On Apple, it looks like it would be 101 to 124. On Microsoft, it would be 179 to 213. If I use the numbers on Google, it's a low of 69 and a high of 83. On Meta, it's a low of 87 and a high of 106. So with those as my guidelines, now what I have to do is plug in, I guess, my gut feel as to what do I think will actually happen here. And that's my target price BG, standing for best guess. I believe I'll be able to buy Amazon at $88 a share. That's roughly a $10 drop. I'll be able to buy Apple at $125. That's about a $9 drop. I'll be able to buy Microsoft at $225. That's about a $14 drop. I'll be able to buy Google at $85. That looks like about a $7 drop. And Meta at $130. That would be a $6 drop. So that just gives me a place to put up on my bulletin board and say, okay, let's see what happens and let's see how these numbers measure up. Again, how I get into it, I will have to make a decision. Am I going to just go in and make a buy, or am I going to, after the earnings, start dollar cost averaging? That's a video I'll do in the first week of February. But I think it's the lesson I want to teach here is that don't go into it blind. Take a look at these charts. If you want it, just stop your screen, push print screen, and then go and print that chart. That's my data. You create your data. You create your buying price. What I want to emphasize is artificial intelligence, machine learning, and quantum computing is going to change the world. At one point, I did a video where I had read an article that said the change that's going to happen in the next 10 years would be equivalent to if Benjamin Franklin came back from the signing of the Constitution and came into January of 2023. That's how much change we're going to see in the next 10 years. And I am just convinced it's going to be driven by these 5 companies. I did a video where I talked about maybe the toughest job in the world right now. And it's by the CEOs, the current CEOs of these companies, because they know there is going to be so much change. And it's like Jeff Bezos said, you get about a 10-year run, and then you become irrelevant, and someone passes you. I did a video yesterday where I explained that these companies are just searching for the next Steve Jobs and the next Bill Gates. They are looking for young people who have the next big idea so that they can survive. How would you like to carry that on your shoulders? I know they're making millions of dollars a year for that weight, but it's a big job. And if you will identify with the job they have to achieve and then watch what they're doing and go to the video I did yesterday where I introduced you to their venture capital people. And I want you to recognize there wasn't a damn one of them as old as you and I. Their average age was probably 32 years old. These are the people who created Google, who created Apple, who created Amazon. Look at their histories. They moved through those companies, and they were integral parts, and they've reaped the benefits. And now They don't want to invest in their own company other than what their stock options are. What they want to do is find the next Amazon, the next Google, the next Microsoft. And then they want to fund it and bring it under their umbrella. They have to do that in order to survive. So these are the 5 best horses in the race. Okay? You want to own them, and you want to watch them very closely and see what they're doing. Just like right now, there's a lot of fervor about OpenAI. Microsoft had originally put up $1 billion to finance its development. Last week, they upped that ante to $10 billion. Why? Because they know that's what they need to do to stay in the position that they are. That's what they need to do to double that price from $239 to $550. That's what they have to do. So watch them, learn from them, and own them. Talk to you again tomorrow.